Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's go from equities to the bond market. We got that revision of CPI. We got a lot of bond auctions this week. Everything seemed to be okay. We are, though, at year-to-date highs with some of yields across the curve. So Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, joins us now. Okay, Ira, if you were to describe this week so far, how would you describe it?
Choppy. It's just certainly we see somewhat higher yields, from the beginning of the week to now. But when you look at the preponderance of the data that we've received, plus how the auctions went, and you saw that things were pretty decent in terms of demand. So these higher yields are starting to draw in some investors, which leads us to believe that we're probably trying to find a range here for a lot of places along the curve. The 10-year somewhere, broadly speaking, between 380 and 4.25. I suspect that until we get to at least the March FOMC meeting, that we might stay in that range. So you have another month basically of just choppy trading.
So where are we when you kind of talk to clients out there in terms of timing of a rate cut? March off the table, it seems like. I hear now there's waffling on May, that maybe people are pushing out to June. What do you see?
Yeah, that's true. And then there's another camp also that suggests that maybe if the Federal Reserve doesn't cut in March, which, like you said, is certainly not priced in the market anymore as it used to be, that maybe the Federal Reserve will need to cut by 50 in May if they start, right? So there's a lot of different camps right now, and doesn't seem to be a whole lot of consensus, which of course is what makes markets, of course. But a lot of times there's certainly people leaning one way or the other as to whether or not there'll be a cut in May, whether or not and then the magnitude of that cut now is a discussion point among investors, and there's this feeling that the longer the Fed waits, the more that they may have to cut later, or that they might cut faster. So the idea being that if they don't maybe go in a cut in either March or May, that maybe in June they have to cut 50 basis points as a starting point. I'm skeptical of that, and I actually think that the Federal Reserve would do well to give themselves optionality by cutting in May and then not maybe cutting in June, and that way thereafter they can make a decision meeting by meeting. The problem is that markets always interpolate and say, okay, well, if they're cutting in May, that means they're cutting every single meeting after that, and that's certainly not what the Federal Reserve would like to be priced into the market at this point.
So we got choppy yields. Based on what you've seen today in the bond market and sort of the setup, does it make sense that you have equities at all-time highs? I appreciate you're the bond guy, but I bet you have a view on this.
Well, risk assets, I think, there's a valuation metric and then also a growth metric, right? So you have, top line, bottom line, and then what people are willing to pay for their asset. I think that there's a lot of people, it seems like, at least to us, that there's still significant flows into equities, and part of that is just fear of missing out. Just people who think that they have to be invested. There's still there's this idea that, hey, savings has been exhausted, and that means the consumer is not going to be spending as much. But at the same time, when you look at the savings rate of the country, we're still saving hundreds of billions of dollars a year, right? And that money has to go somewhere. Some of that's going to be invested in stocks, some will go into savings and money market accounts, and some will go into bonds, obviously. So the mix of that savings and where it goes, I think, matters. And just, people are return chasers, right? Particularly retail investors. So, they open their year-end statement and say, hey, stocks did great last year, I better buy stocks now. That's not always the best decision, right? But that nonetheless, that does create these meaningful flows. And then on the bond side of things, with the Federal Reserve maybe not cutting as aggressively, there has certainly been people rotating out of some fixed income assets, particularly the front end of the yield curve, and maybe going the other direction now, and not necessarily being short, but basically finding other alternatives. And you look at money market funds. Money market funds continue to have massive inflows, and now their assets under management are the highest ever once again.
6 trillion. Wow. You look at the
Over
chart,
6 trillion.
it's so hard to see all the zeros because you're like, wait a second, what's that? I mean, that's huge, 6 trillion.
6 trillion. All right, so
and people keep asking, Alex, how is the government funding all of these deficits? Well, it's right there, because people putting money into money market funds just means that the government issues T-bills and money market funds buy them.
All right, Lisa from Upper Manhattan writes in and says, I have to ask about the auctions this week. How did they go? What did you learn?
They went very well, surprisingly well, actually. What we've seen the last few months was you'd have one auction that would do well, and then another auction would do poorly, and where people basically pick their spots in where to invest in auctions. But this week's auctions, the 3-year note, the 10-year note, and the 30-year bond, they all went fine, and these were also larger auction sizes. The one that I was really worried about was the 3-year auction, because that was $2 billion larger than the month before. And that was probably the weakest of the three, but people still wanted to buy duration. And I think part of that is endemic of the fact that we have higher yields now than we did a couple of weeks ago. So it was an easier way for people to start taking market risk instead of going into the open market and paying a bid offer, because at the auctions, you're basically buying on the bid side. So that's attractive for some investors. And it does seem like, what we call indirect investors. So those are end users. Those are foreign portfolio investors or central banks or domestic investment funds. They were big participants in this. So this wasn't driven by primary dealers. This was really driven by end user investors having pretty good demand.
Ira, next week you get CPI Tuesday, retail sales Thursday. Do you think any of this is really going to move the needle for you?
Well, maybe not in terms of the Federal Reserve, but I think it will give some new information, obviously, as to maybe what the future path is. Again, we're talking about May or June, and we're talking about 25 or 50 whenever the Federal Reserve does go. So these are always important numbers, and CPI is next to payrolls is now the number one. So it's payrolls and then CPI, then retail sales, in that order that the bond market cares about. And when you look at the knee-jerk reactions after those news releases, that's when you see 10-year yields move the most one way or the other if you get a big surprise. So, again, next to payrolls, next week's two numbers are really the key for the market and maybe the market direction in the medium term.
All right, Ira, thanks so much. As always, appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, kind of getting a sense here. We have some more data, as you mentioned, Alix, next week, but I'm just looking at the WERP function. It's kind of 50-50 for a May price cut. And that, it's been well over 100% chance that there would be a May cut. Back in January, the market was discounting, hey, it's going to happen in May. Now, a little bit less so.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Here's my question. Are you guys watching the Super Bowl? Have we confirmed this?
Of course. Yes.
Well, obviously, Paul.
Yep.
Yeah. I guess.
I feel like I have to.
No, I have to go to bed at like 6:30, 7 o'clock.
Yeah, you're gonna get
to
maybe
be here.
kickoff.
Right.
I'll just I'll record it on my VCR.
Okay. I think I have to watch it.
VCR.
Oh, wow.
He's got his beta
yeah.
Max.
That's not even a thing. I feel like I have to watch it to be able to have this conversation with you guys on Monday.
Be socially relevant.
Well, sure. I mean, am I socially relevant? I don't know.
Do you have a pick?
No.
No, not that
Do you know
far.
who's playing?
Yes, the 49ers and the Chiefs.
Very good.
Thank you. I think I have to go with the Chiefs because my daughter likes Taylor Swift.
Lord.
But this leads me into the question of snacks.
Yes.
Because I'm not going to, as we
Fritos.
know, I don't eat junk food, so I'm not going to be eating chicken
I think
wings.
there's Lisa Mateo. This is just not
I'm
our
not going to
crowd.
drink beer. I'm not going to do those things.
Oh,
so
well, I really
maybe
wanna
if we
party
had
with
some,
you.
Yeah, exactly.
we had some prosecco and some hummus.
Okay.
And some pita and maybe some cucumbers and carrots.
That's the food. That's the
Where
Oscar,
in Brooklyn
That's
do you
the
live?
food for the Oscar party, not the Super Bowl.
But I bet you I'm not the only one who's going to have to be doing this, which leads, I think, to Jen Bartashus.
Okay, let's go to some.
Senior retail staples and packaged food analyst. Jen, usually this conversation is chicken wings and beer and pizza and stuff. Is the conversation different this year?
Well, it's a little bit different in that snacks are still a huge part of the Super Bowl, but because the viewership is going to be changing a little bit for this game, mostly due to that Taylor Swift impact that you were talking about, we may see a little bit of edging into slightly healthier snacks like popcorn or things like that versus just the pizza, wings and things like that.
How big? I mean, it's this weekend, the 2 weeks has become so big. And if I'm the packaged goods companies, is it an important day for them to, push their product, promote their products, have people buy their product?
Yeah, it's important in two respects. The first is that the Super Bowl is the second biggest food holiday in the United States.
Really?
So in the week up to the Super Bowl, people will spend, according to our estimates, $906 million in 1 week just on snacks. When it comes to food and beverage as a whole, for the 1 week before the Super Bowl, $8.8 billion. Oh. So it is a meaningful, unofficial holiday for beverage and food companies, for sure.
This might be really off, but it's also the Lunar New Year, and I'm actually going to 2 parties over the weekend, which I don't go to parties, so this is actually a moment for me.
No parties, no beer, no wings.
Yeah. I'm really not selling myself
Boring.
well. Days of time spent at Expedia.com. But Jen, is there like an overlap here? I mean, I appreciate that the food you might have for Lunar New Year is going to be different than the snacking you do for the Super Bowl, but is this like a moment for someone that's more, diversified to really capitalize?
Absolutely. When you look at some of the packaged food companies, especially those that play in the confectionery space, like Mondelez or Hershey, they actually tend to see a sales bump around Lunar New Year. So you've got complementary things happening. So between the Super Bowl and between the New Year, it could be a very, very nice little period for the packaged food companies and the retailers that sell those products. But just remember, as we're going into earnings season, all of this is going to impact first quarter earnings, not fourth quarter earnings.
Jen has got, in her research note here, Jen has got some data that just blows me away. I had no idea. The dollar share in the salty snacks category, PepsiCo leads the way with 60.8%. Number 2, the private label group as a whole, 6.9%. Jen, what's good? I mean, the salty snack business is PepsiCo. PepsiCo is the salty snacks business.
It really is. I mean, and if you have to remember, PepsiCo owns Frito-Lay, right?
Yeah, darn right.
So all of those, whether it's your Lay's potato chips or Doritos, all of those salty things are all part of that PepsiCo portfolio. Other players in the salty snacks category can also win. Kellanova owns Pringles. That's also a popular kind of game day pop it and eat it kind of thing. Hershey has popcorn brands. So, but by far the dominant player is PepsiCo.
What's their growth rate? Because didn't they disappoint with earnings?
They did, but they disappointed in earnings on the beverage side of the business. Volumes were down, and part of that is just elevated input costs, especially in sweeteners.
So talk to us. Let's step back. All right, so the Super Bowl is going to be big. People are going to go crazy. Talk to us about the supermarket business. What's going on there these days?
Well, with regards to grocery, there's a couple of things that are happening. So first is we've started to see food inflation come down. So that's actually good news for the consumer. And that's really being led by the grocers. And so when the U.S. goes through an inflationary period, the grocers are one of the first retailer types that will actually bring prices down for consumers. And so although there's been a lot of political buzz about food prices still being too high, the inflation rate is coming down. We are starting to see prices come back down. But that's going to present a unique challenge as the year goes on, because if things cost less, if you're going to maintain your top line growth, that means you have to sell more volume. And so that dynamic between that price and volume is going to really be exacerbated this year as inflation starts to recede.
Can we go to Super Bowl ads? I know you went away from it for a second, but let's go back to the ads. So Bud Light, I mean, was the Super Bowl last year the one that had the disastrous ad?
I don't remember.
Well, it was. I honestly don't know if it was part of the Super Bowl, but it was where they kind of had that. The
transgender or something.
The transgender
influencer.
Yeah, and that just really disrupted sales, had a meaningful impact. What are we going to expect from like the retailers and the snack guys with the ads? Like how kind of cautious are we going to see?
My guess is, they'll probably be a little bit more conservative in terms of broad appeal, right? And so at the end of the day, you pay a lot of money for a Super Bowl ad. And so you want it to resonate with as many people as possible and spur as many people to action to buy your goods and services. And so I think it's a reasonable assumption that there'll be kind of mainstream type of messages. But of course, 44% of people who tune in to the Super Bowl do it for the ads. So it's a form of entertainment. And so I wouldn't expect anything too serious or too heavy as we look at the advertisements this year.
Yeah, and Bloomberg News had a story out today just, saying how it's, it's going to be right down the middle of the fairway. Try not to get anybody upset. Try to make people feel good. Try to bridge some gaps maybe. So we'll see how that plays out. But again, $7 million for a 30-second spot is what CBS...
$7 million for a 30-second spot?
Yes.
Wow.
Yep. Now, actually, it's little to no growth from last year. And I actually think people are going to get a great buy for that $7 million because it is going to have a better audience. I think better demographics, more women than typical. And that makes it more valuable, in my opinion. I know. Exactly.
I am case in point.
You are the case in point.
Right. Just get me some hummus ads. We're good.
Exactly. Jen Bartashus, thanks so much for joining us. Jen Bartashus, she covers all the consumer space for Bloomberg Intelligence, doing a great job. Taking a look here at some of the packaged goods companies and kind of how they play, how important this Super Bowl Sunday is. And it's some big dollars out there. But again, I was just blown away by the fact that in the salty snacks category, PepsiCo, 60% of the market.
Are we all Frito lovers here? Like, is this
Fritos.
My takeaway from you guys? Like, the straight up, like
straight
Fritos?
Straight up Fritos. That's the go-to.
Dude, you can dip Fritos.
Sure.
I mean, they're already made of garbage, right? So you can just dip them in anything.
Yeah, exactly.
Sure.
Exactly.
Yeah, I mean, it's just preservatives and things.
Somebody around here likes the Cheez-Its, and that's a solid snack, but I'd have to go Fritos over Cheez-Its.
What do you wash it down with?
Budweiser in cans.
Really nice red wine.
No,
exactly. Dilute the taste.
No, nice
Barbaresco.
Pinot with Fritos.
Aww.
It's a great pairing.
No, the house brew in the Sweeney estate is Budweiser in cans. Has to be.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We've got retail sales next week. And then we'll also start getting the earnings reports from some of the big retailers. So we just heard from Jen Bartashus that consumers are going to spend up to $1 billion on salty snacks and stuff for the Super Bowl. I don't know how the consumers doing. I think it's pretty good shape. Let's check in with Jill Blanchard. She is the president of Enterprises Client Solutions. Her title, President of Enterprise Client Solutions. And the name of the firm is Advantage Solutions. Jill, thanks so much for joining us here. Give us a sense of, we come to the Super Bowl weekend. I guess consumers are buying stuff, but how's the consumer doing out there generally in terms of, going out there and buying stuff versus maybe buying experiences?
Yes. So first of all, hello, and thank you for having me back. Really good question, because we're really seeing a dichotomy out there. It's definitely tough for consumers. I heard Jen say that food inflation has cooled, which it has, but it's still up 25% since 2019, and that's 6 points higher than the average inflation. So consumers are both paring down to spend less and find things that are of more value, but at the same time, looking for affordable indulgences. The Super Bowl is one of those. It is akin to the next Thanksgiving, where you've got herds of people that gather inside the home to do food, family, fun, football. I think that we saw that the NRF Super Bowl surveys predicting a record number of Super Bowl sales. About 80% of that is food and beverage. So if you're selling those products, this could be a really good season.
And just for our audience, Advantage Solutions, you basically talk to retailers and help them understand, say, inventory, if they have the right products on the shelves, even if they're in-store or online, etc. What did you tell people before the Super Bowl to stock up on?
Oh, great question. So a couple of pieces of advice that we put out there to both our manufacturer as well as our retailer clients. One is the recent trend that we saw and talked about last month, which is the disproportionate spend that we're seeing in the 2 to 3 days that are leading up to key events. So for the Super Bowl, think today and tomorrow. So the retailers have to make sure that they have that inventory. The second thing is look for consumers to pare down to find value. So as it relates to Super Bowl, that's going to mean different things to different consumers. So that may be paring down from like a Wagyu beef to a prime rib. It could be from a prepared charcuterie platter to one that you make yourself, a big brand to a national brand. And of course, always looking for things on sale. And then let's talk products. Here are what we think are going to be two of the surprises for Super Bowl. One is non-alcoholic beer and mocktails are having a really good day.
Oh, please.
They're both gaining.
Forget.
I see you. You're going to lose these two guys on this one.
I heard the previous discussion about red wine, beer, and Prosecco. But NA beer and mocktails are having a pretty good day. So we see those both cannibalizing some of the alcohol sales, but also adding to overall beverage sales. And then another contender this year is private brand. 92% of consumers trust a private brand as much as a national brand. And it's a great way for consumers to pare down and get that value. So think snacks, ingredients, appetizers.
That's what I have to admit. I'm not a big shopper, but I noticed a change in my shopping habits for groceries during the pandemic when we were buying more stuff and prices were going up. I now go store brand probably way more than half now. You know, it's only a few items.
And why? And is it price?
Cost. I just figure it's just cost. I mean, it's materially lower.
It is, yeah.
Like 30, 40% lower on some of these things. So I don't know, but I mean, that's a change in behavior. So I guess the question here is we're going to get retail sales next week, and we're going to start hearing from some of the retailers. But it appears, you know, that the consumers, they have a job if they want them. Wages are going up. Is it fair to say that the consumer, we should expect the consumer to continue to be fairly strong?
Oh boy, I think in the consumer packaged goods world, we're probably looking at flat for 2024. This is what most of the industry experts are saying. Manufacturers, though, in the recent survey that we just did at Advantage, 80% of manufacturers are predicting growth based on new products and expanded distribution of current products. That could be a little too confident. They were also overconfident in their holiday sales predictions. Retailers are less confident, with about half of retailers predicting mild growth. So we'll see how it plays out. Consumers, you know, as I said before, are still in a pretty tough place. The overall confidence in their ability to afford everyday life has gone down 20 points from 60% to 40% since 2019. So this will definitely have an effect on 24 sales and volume.
What are you telling them about inventories? Are we going to be in a world where, I guess I'm talking more with, say, clothing, electronics, maybe rather than food. Is it going to be like a just-in-time inventory, or what are you telling them?
Inventory is a really tricky proposition right now. You've got a lot of retailers trying to reduce inventory, which is a risky game to play. There are benefits to doing that, but there are also challenges in that if there's, I mean, take the recent social media runs. I mean, don't get me going on the Stanley Cup, but there are runs on products which could be driven by social media, could be driven by a strong marketing program. And oftentimes, and also don't forget the disproportionate of sales, the 2 to 3 days before the key events. Many retailers got caught in Thanksgiving and had to adjust for Christmas because they didn't have the inventory. So it's a bit of a, it's a bit of a risk. It's got upside, it's got downside.
Are there enough chickens out there for the chicken wing demand?
Oh no, big question.
Did you see that the National Chicken Council last year said that there were enough chicken wings consumed last year during Super Bowl for every person in the country to have 4? So I'm not sure who had my 4, but somebody's having a lot of wings.
And I remember, I mean, there was a time, I can't remember if it was last year or the year before, where it was kind of in a pandemic area that there weren't enough chickens because they had some diseases and something like that. So there's the price of chicken wings were higher.
Yeah, they had flu. It's a real thing. I have to have a confession.
Oh, no, here we go.
No. She's like, hummus wings.
Yes.
I don't like chicken wings. I like the sauces on chicken wings.
Okay, it's
So
just
someone can have
just
my
the wing
4.
itself.
Just the wing, it doesn't do
Somebody's having both our wings, because 4 wings per person just seems mind-boggling.
Very good. All right, Jill, thank you so much for joining us. Really appreciate it. Jill Blanchard, President of Enterprise Client Solutions. The name of the firm is Advantage Solutions. We're learning so much, aren't we, John?
I know, and I'm just like pouring it out. Like
We know not to go to her house
exactly.
for a party.
Or bring our own, I think is probably.
I bake.
You bake?
I bake with like real fat and stuff.
Okay.
But no sugar.
No, with real sugar. Like I actually tried to bake without sugar and do like some fig paste instead. It didn't work out. No. So I cook with lard and cook with, I'll bring something in, and it'll be a nice moment for us.
All right, we'll look forward to that.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, it is Super Bowl Sunday. We cover this story from the business perspective, and you know why we do that? Because we have a podcast, Business of Sports, hosted by the Scarlet Fu of Bloomberg News, Michael Barr and Damian Sassower. Damian Sassower, Bloomberg Intelligence, Michael Barr, Bloomberg News as well. Michael Barr and Damian Sassower join us here in studio.
Hold on. This is my first moment with Michael Barr on set ever.
Oh, really?
Yes.
Really? Oh, this is
and
big.
And Michael Barr talking is my most favorite thing.
There you go. This is
Hi, Alix.
Hi. This feels really exciting for me.
Damian, how big is the business of the Super Bowl?
It's only as big as Michael Barr's voice will allow it to be. I mean, that baritone voice, it draws in all the greatest guests. We had on our show this week the presidents for the San Francisco 49ers and the Kansas City Chiefs, and we had the CEO of BetMGM, and you know what they all said? It's going to be a huge Super Bowl. I'm talking like
of course they're
the amount being bet on this Super Bowl is going to be something on the order of $24 billion. That's a 33% increase over last year alone. Isn't that right, Michael Barr?
And they're betting on everything: the color of the Gatorade, the length of the national anthem. Well, I mean, how many? Now you got to go offshore. Yeah, but you got to see how many times Taylor Swift is going to be on TV. I mean, you can bet on everything.
Can't you bet somewhere about if Taylor Swift will cry? Like, is that legal or not?
The tear has to drip below the halfway point of her cheek, and her. No, I'm kidding. I don't know. How do you say? How can you tell?
No, but I think
the answer is there are prop bets like that.
Yes.
They're called prop bets, and the prop bets are on. You can find them in any sports book. You can find them at the online gambling sites.
Absolutely. FanDuel, DraftKings, BetMGM, Caesars, you name it, they're all carrying it. But I think most of their prop bets are the ones that you find are related to the actual outcome of the game. Some of the things we're talking about are, I think you have to bet through like some Panamanian, website that will take your bet and never pay you out. No, I'm just kidding. But I mean, look, they've got, the real story this year is going to be the comeback for advertising, right? Because, we don't have cryptocurrencies anymore, apparently the biggest sector that's going to be kind of, advertising during this Super Bowl, at least in terms of an increase, is going to be candy, sweets, and cookies. So Oreo, Reese's. You're very interested in that, Michael.
I want to see that. I missed the Clydesdale. They were, Budweiser, to me, they have always had the most iconic commercials.
Yep.
And I want to see that. Yeah. By the way, just a heads up, there also a bet if Travis Kelce will propose to Taylor Swift if they win. And then there's a little, I think the Chapel of the Flowers or whatever it is, on the strip says, look, if they do it, you can come in for free for the wedding. And then they said, well, if you pass, anybody named Travis and Taylor coming in, you'll get a free wedding.
What are the experts saying about the game? I mean, it's only a 1.5 point spread, so I guess everybody's expecting it to be a competitive game.
Well, I think from that perspective, it comes down to defense, but, both defenses are overshadowed by their incredible offenses this year, so it's difficult to tell. I think, it's very difficult, even though the Chiefs are getting a 1.5, call it 2 points. To bet against Patrick Mahomes and, to actually get points and do it is pretty unbelievable. But, I think really, it's about, stopping, it's going to be about stopping, the San Francisco run game. If they can manage to stop that run game and force Brock Purdy to pass, I think the 49ers have a legitimate chance here.
Alix,
I'm sorry, the Kansas City Chiefs. Sorry.
Talked to me one day, little birdie in the degenerate newsman's ear, 47.5 the last time I had seen the over and under. And we also had an interview with Amy Trask, who is within the front office with the then Oakland Raiders. And I thought this was going to be a high-scoring, highfalutin game. No, she said this is going to be a defensive struggle. So don't be surprised if it goes under.
So Scarlet Fu and I are very similar, okay? We're kind of both really anal. We like prepping. we have a similar taste in most everything except for sports because I know nothing about sports. So let's pretend I go to a Super Bowl party, okay? Right. And I have to say smart things. What am I saying?
You want me to take this one, Michael Barr?
You want to take your...
Here's what you want to talk about. You want to talk about Halo Glow liquid filter. Elf's ad is going to take over during some of the commercials. I think also, this is an important point. Paul and I were talking about this. The female audience, not just due to Taylor Swift, but just generally speaking for the Super Bowl last year alone was 47% female. Now you've got Taylor Swift, so you have advertisers.
Me.
Dove.
I'm
yeah,
the
you. They're talking to you, Alix. They want you to, basically buy the ice cream brand, drumstick. They want you to shop at Etsy and eat Lindt chocolates, like Kelsey's wife does. I don't know.
I will do that.
That's kind of what they want from you.
I know we're running out of time soon, but I just, to get pumped up for this, I had to watch some old clips of the San Francisco 49ers, and this was on the old Monday Night Football. This is 1976. I don't want to give away my age that I was 12 years old then, but I just did. and here it is. Here's Alex Karras in the opening, and he's smoking a cigar as he's talking to Howard Cosell. Yep. And I'm like, oh, man, what happened to this era, man?
Yeah,
this is great.
Now, Sportico.com, which is some Bloomberg News alumni, they have a good story out. Purdy, the QB for San Francisco, he may be the cheapest QB ever.
Absolutely.
For now, right? But for now?
For now, exactly right.
Wait till tomorrow or Monday?
They're not paying him.
Well, that's a great stat. Let's just think about the numbers. Mahomes makes $36 million. He's 17% of Kansas City's salary cap. Brock Purdy is only 0.37% of the 49ers salary cap. What an investment.
Mr. Irrelevant. Jeez. To me, that is the biggest story of the Super Bowl. He was the last one picked.
Very good,
See,
Alex.
That's what you take to the party.
Now, Paul Sweeney, some trivia for you. Who was the previous cheapest quarterback to play in the Super Bowl and win?
Oh.
It's a good one. It's an easy one. It's right there in front of you.
Oh.
Tom Brady, 2002.
Oh, really?
Right? There you go.
Was that the year that...
0.46% of the salary cap. That was his first year when the Jets knocked out Bledsoe. All
right, so you guys are the experts. Michael Barr, what is your pick here?
I am because my wife is listening and is a diehard 49ers fan, Pud, I think is going to be San Francisco 21, and I think it's going to be the Chiefs 17.
Interesting.
Okay. I'm going to be rooting for San Francisco, but if I were a betting man, I would not be betting against Andy Reid and Patrick Mahomes and the Kansas City Chiefs. So I'd probably take the points and probably take the over there. Maybe parlay it a little bit. Maybe play.
Are you going to have a little app on your phone that will allow you to do just that?
I don't gamble, Paul. I'm an investor. I'm a risk-adjusted investor. You know me, emerging markets, fixed income. So I'm not really a big gambler, but I'm sure I'll get a box or two at the Super Bowl party on Sunday.
You don't have to go to your app if you want to make this bet.
Here we go.
We got a market here.
We got it happening right in front of us.
He's still upset because I beat him in fantasy.
Oh, and he beat the stew out of me in fantasy too.
All right, folks, check out the podcast Business of Sports, hosted by Scarlett Flew, Bloomberg Television, Michael Barr, Bloomberg News, and Damian Sassower, Bloomberg Intelligence. They host that. Does it come out weekly, Gents?
Yeah.
Gents,
weekly.
That's a weekly. And they get some great guests. You just heard here some of the leaders in the NFL this week. So they get some great guests in the Business of Sports, as that's how we do it here.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.